Have you ever felt like you're doing all the right things, saving diligently, cutting back on spending, yet your financial progress feels stuck in neutral? You're not alone. In a world where inflation quietly chips away at your hard-earned money, relying solely on traditional savings accounts might feel safe, but it's far from strategic. The truth is, parking your money in a bank is like running on a treadmill with the incline turned up. You're exerting effort, but you're not really moving forward. And while your account balance may tick upward slightly, inflation is outpacing those gains, leaving your purchasing power shrinking year after year. Meanwhile, banks are turning your deposits into profits, lending your money at high interest rates while handing you back mere crumbs in return. It's like filling a leaky bucket. No matter how much you save, it keeps draining slowly over time. Now imagine approaching your finances like tending to a thriving garden. It's not enough to plant the seeds. You need the right tools, nutrients, and strategy. That's where alternative assets come in. These powerful investment vehicles offer more than just protection. They create real opportunities for growth, even in uncertain markets. In this video, we'll unveil 7 high-impact alternative assets that can supercharge your portfolio, outpace inflation, and help you build wealth that grows and lasts. If you're ready to stop settling for slow leaks and start investing with intention, let's dive into the smarter side of financial strategy. Government bonds. When it comes to building a portfolio that balances risk and reward, government bonds are the unsung heroes of smart investing. Unlike the low-interest savings accounts that barely keep up with inflation, government bonds offer something far more valuable: security, consistency, and peace of mind. Think of it as lending your money to the government with the promise that you'll receive steady interest payments and your full investment back at the end. And since these bonds are backed by the government itself, they're among the safest financial tools available. Here's where it gets interesting. During economic chaos, when stock markets tumble and uncertainty takes over, investors don't run to savings accounts. They flock to government bonds. Take the 2008 financial crisis or the 2020 pandemic crash. Both times, U.S. Treasury bonds became a safe haven. While stocks were in free fall, bonds held steady, proving once again that they're built to withstand storms and protect your capital when it matters most. But don't let their safety fool you into thinking they're boring. Government bonds can be a cornerstone of long-term growth, especially if you reinvest the interest for compounding returns. They help smooth out the volatility of riskier assets like stocks and crypto, bringing balance to your portfolio. And for those nearing retirement or playing it smart with conservative strategies, the predictable income stream bonds provide can be a financial lifeline. At the end of the day, government bonds aren't just about safety, they're about strategy. In a world where inflation quietly erodes the value of money, bonds offer a dependable way to keep your financial foundation strong. So, as you map out your journey toward financial independence, don't overlook these rock-solid assets. They might not be flashy, but they're proven, powerful, and ready to help you build lasting wealth. Real estate. If your money is just sitting in a bank account, it might feel safe, but in reality, it's slowly losing power. Enter real estate, a tangible, time-tested investment that not only preserves your wealth, but helps it grow, often dramatically. Unlike savings accounts that offer minuscule returns and barely outpace inflation, real estate has a long history of increasing in value, turning ordinary investors into millionaires over time. Think about it. As property values rise, so does your equity, and that equity becomes a powerful tool for generating wealth and financial freedom. Compare that to cash, which loses purchasing power year after year, and the choice becomes crystal clear. Let's look at real numbers. Back in the early 2000s, the average U.S. home cost around $170,000. Fast forward to 2020, and that same house could be worth $350,000 or more. Even after economic downturns like the 2008 crash, major markets like San Francisco and New York not only bounced back, they skyrocketed. Real estate doesn't just survive volatility, it thrives through it. What makes real estate even more exciting is leverage. With just a fraction of a property's value as a down payment, you can control a major asset and enjoy all the gains. Imagine putting $60,000 down on a $300,000 property. A 10% price increase adds $30,000 in value. Not bad for a relatively small upfront investment. That's a 50% return on your money thanks to the power of leverage. And it doesn't stop there. Real estate can pay you while you sleep through rental income, all while your property continues to appreciate. It's the classic 1-2 punch, cash flow plus capital growth. That kind of passive income can set you up for life, or better yet, set your family up for generations to come. Speaking of legacy, real estate is one of the few investments that lets you build wealth you can pass down. A well-chosen property becomes more than an asset. It becomes a foundation for your children's future, a tool to break generational financial ceilings. In a world where inflation eats away at savings and markets can swing wildly, real estate remains a rock-solid wealth builder. It's not just about bricks and mortar, it's about freedom, security, and legacy. So if you're serious about mastering your finances, real estate isn't just an option, it's a must. Gold. In a world of economic chaos and unpredictable markets, one asset has stood tall for centuries: gold. When stock markets crash, currencies lose value, and inflation spirals out of control, gold doesn't flinch. It shines. From the Great Depression to the 2008 financial crisis, history shows us time and again. When fear grips the markets, smart money runs to gold. Why? Because unlike paper money that governments can print on a whim, gold is finite. All the gold ever mined could fit into a cube just 21 meters tall. That's it. This built-in scarcity gives gold a powerful edge. It's immune to the reckless overprinting that drives inflation and devalues cash. While your dollar may buy less tomorrow, your gold keeps and often grows its value. Take the 1970s, for example. As inflation skyrocketed, so did the price of gold. It wasn't just a shiny metal, it was a shield against economic erosion. Fast forward to today, and we're seeing echoes of that era: rising prices, expanding money supply, and global uncertainty. That's why more investors, and even central banks, are doubling down on gold as a safe haven. But here's what makes gold even more compelling: accessibility. You don't need a vault or millions to get started. Whether it's coins, bars, or ETFs, gold offers multiple entry points for every type of investor. And because gold often moves opposite to the stock market, it's a powerful tool for diversifying your portfolio and balancing risk. Think of gold as your financial anchor. When everything else feels like it's on shaky ground, gold is the asset that holds firm. It's not just a commodity, it's a time-tested store of value, a hedge against inflation, and a critical piece of any serious wealth-building strategy. Bottom line, gold has protected wealth through wars, crashes, and currency collapses. As we navigate an uncertain future, this ancient asset remains a modern-day powerhouse. So if you're looking to shield your financial future and build lasting value, gold isn't just worth considering, it's essential. Luxury collectibles. Imagine if that vintage watch in your drawer or that dusty bottle of Bordeaux in your wine rack wasn't just a keepsake, but a serious investment. Welcome to the fascinating world of luxury collectibles, where passion meets profit and everyday items can become high-performing assets. From iconic artwork and rare coins to fine wines and classic cars, luxury collectibles are drawing the attention of smart investors eager to escape the ups and downs of traditional markets. These tangible treasures don't just sit pretty, they gain value over time, often outperforming stocks and savings accounts. Just ask the buyer of a Jean-Michel Basquiat painting, which sold for a jaw-dropping $110.5 million, or the collector whose bottle of Burgundy fetched more at auction than a small apartment. So why are these assets so powerful? Because they're driven by rarity, emotion, and timeless appeal, factors that often remain strong even when markets dip. In fact, during economic turbulence, wealthy buyers tend to double down on rare collectibles. Take the legendary Ferrari 250 GTO, which sold for over $48 million. Proof that passion assets can become portfolio powerhouses. But here's where it gets even more exciting. You might already own valuable collectibles without realizing it. That old Rolex? It could be worth 6 figures today. A pair of limited edition sneakers? Some sell for tens of thousands. Your collection of comic books or vinyl records? There's a booming market for nostalgia. What was once a personal hobby might just be your next financial win. Thanks to online auction platforms like Sotheby's, Christie's, and even digital marketplaces, accessing this market has never been easier. Whether you're buying, selling, or just curious, the luxury collectibles world is now open to investors at every level, not just the elite. Bottom line, luxury collectibles offer more than aesthetic pleasure. They offer real potential for wealth growth and protection. As inflation eats away at cash and markets remain unpredictable, these unique assets can serve as a hedge, a passion, and a legacy, all in one. Cash. In an age where tapping your phone can buy a coffee, it's easy to forget one simple truth. Cash still counts. But what happens when the power goes out, the bank systems crash, or your card just won't swipe? In moments of crisis, whether it's a natural disaster, a cyber attack, or just a network failure, having physical cash on hand can make all the difference. Digital banking is fast and convenient, but it's also vulnerable. A TMS can run dry, branches can close unexpectedly, and during emergencies, when you need access to funds the most, your cards and apps might fail you. That's why every financially savvy person should keep a stash of readily available cash, not just for peace of mind, but for real-world resilience. But cash isn't just about crisis management. It's a critical part of a well-balanced financial plan. Yes, investing builds long-term wealth, but without a cash cushion, you're one unexpected bill away from dipping into high-interest credit or selling off investments at the wrong time. Experts recommend keeping 3 to 6 months of living expenses in cash, a safety net that protects your future while giving you freedom in the present. That said, hoarding piles of cash isn't the goal either. Cash sitting idle loses value to inflation and earns little to no return. The key is having a smart cash strategy, one that keeps you liquid without missing out on growth. Think of it like a tiered system, a bit for daily use, a reserve for emergencies, and extra for short-term plans like travel or home repairs. Of course, where you keep that cash matters. Under the mattress? Risky. A fireproof, locked safe? Much better. And just like your investments, your cash strategy should evolve with your life. Got a raise? New baby on the way? Market shift? It's time to reassess and rebalance. As we move deeper into a digital world, cash becomes not obsolete, but essential in a different way. It's your backup, your safety valve, your plan B when everything else goes offline. In conclusion, don't underestimate the power of paper. In a world of invisible money, tangible cash can be the ultimate tool for financial flexibility, preparedness, and empowerment. Build your strategy, store it wisely, stay ready. Entrepreneurship. If you're dreaming of breaking free from the 9-to-5 grind and taking full control of your financial future, entrepreneurship could be your golden ticket. Starting your own business doesn't just give you a shot at making money. It gives you the power to build lasting wealth on your own terms. Unlike a paycheck that caps your earnings, entrepreneurship unlocks unlimited income potential. You're not just earning a salary, you're creating a system, a brand, a legacy. When you align your business with your passions and skills, work doesn't feel like work. It becomes a mission, and profit becomes a byproduct of doing what you love. And here's the game changer. You don't need deep pockets to start. Some of the most iconic entrepreneurs began with next to nothing. Think Howard Schultz, who turned a tiny Seattle coffee shop into the global giant we now know as Starbucks. Or Sarah Blakely, who launched Spanx from her apartment with just $5,000 and built it into a billion-dollar empire. What made the difference? Vision, grit, and relentless determination. These stories prove that entrepreneurship isn't just for the wealthy, it's for the bold. It's about spotting opportunities, solving problems, and taking smart risks. Whether you're building a side hustle or going all in, the entrepreneurial path rewards creativity, resilience, and hustle like no other. But it's not just about money. Being your own boss means setting your own schedule, making your own decisions, and building something that reflects your values. It's about freedom, financially and personally. You decide how big your dream gets. Entrepreneurship also has a ripple effect. You're not just building wealth for yourself, you're creating jobs, fueling innovation, and giving back to your community. Your success becomes a catalyst for others. That's the true power of building something from the ground up. Even if your first venture doesn't take off, the skills you gain, budgeting, branding, leadership, marketing, are invaluable and transferable to any career. Every step forward is a lesson, a tool for the next opportunity. Bottom line, entrepreneurship is one of the most powerful ways to build wealth, gain independence, and leave a legacy. You don't need a fortune to start. You need a vision, a plan, and the courage to begin. So if you've been waiting for a sign to launch that idea, this is it. Your future isn't found in someone else's company. It might just be in your own. Cryptocurrency. In the fast-paced world of modern finance, cryptocurrency has quickly risen from a tech novelty to a mainstream investment powerhouse. It's not just hype. Crypto is shaking up the investment world, offering a blend of cutting-edge technology and the potential for explosive returns. At the heart of it all is Bitcoin, the trailblazer that launched in 2009 and has since turned early believers into millionaires. Imagine buying Bitcoin for just a few dollars and watching it climb to tens of thousands per coin. That kind of growth has pulled in everyone from everyday investors to Wall Street giants, all hoping to tap into the digital gold rush. But it's not just about high returns. Crypto brings freedom. Unlike traditional currencies controlled by governments and central banks, cryptocurrencies run on blockchain technology, a decentralized, transparent, and secure system that puts you in control. No middlemen, no waiting on banks, just fast peer-to-peer transactions with lower fees and greater efficiency. One of crypto's secret weapons? Scarcity. Bitcoin, for example, is hard capped at 21 million coins. That's it. No more can be made. As demand rises and supply stays fixed, economics kicks in. Value can surge. Compare that to fiat currencies that can be printed endlessly, often fueling inflation. With crypto, you're not just investing. You're potentially protecting your wealth against the eroding power of inflation. In today's unpredictable financial world, adding crypto to your portfolio can be a smart move. While it's true the market can be volatile, diversification is key. A mix of traditional assets like stocks, real estate, and bonds, paired with cryptocurrencies, can help smooth out risk while tapping into next-gen growth potential. But crypto isn't just about Bitcoin. The space is bursting with innovation. Think altcoins, DeFi, NFTs, and blockchain projects transforming industries from finance to supply chain. With research and curiosity, investors can uncover hidden gems that could become tomorrow's headlines. Of course, diving into crypto requires smart planning. This isn't a get-rich-quick scheme. Learn the basics. Understand your risk tolerance. Study the market. Being informed is your best defense against volatility. Bottom line, cryptocurrency isn't a passing trend. It's a financial revolution. It offers high-risk, high-reward opportunities that, when approached wisely, can strengthen and diversify your investment game. By embracing this digital frontier, you're not just riding a trend. You're positioning yourself at the forefront of the future of finance. So if you're ready to expand your portfolio and explore new horizons, crypto might just be your next bold move. As we bring this conversation to a close, one thing is clear. Sticking to just traditional savings won't cut it anymore. In a world where inflation eats away at your hard-earned money, playing it safe with a savings account alone could actually be holding you back. The real power lies in diversifying your investments and exploring alternative assets that can help your money work smarter, not just harder. In this video, we've taken a deep dive into exciting avenues beyond the usual, like real estate, which continues to build long-term wealth, government bonds, offering dependable stability, and the high-reward potential of cryptocurrencies, the new frontier in digital finance. We also uncovered the hidden value in luxury collectibles, from vintage watches to rare art, that combine personal passion with serious financial upside. The big takeaway? Diversification isn't just a smart move. It's a financial game changer. By blending traditional and alternative investments, you create a portfolio that's more resilient, more dynamic, and better equipped to thrive through economic ups and downs. It's not just about growing wealth, it's about building financial independence and long-term peace of mind. Now it's your turn. Think about what resonates with you. Is it starting your own business? Investing in your dream property? Taking a bold step into the world of crypto? Whatever your path, don't wait. The time to take control of your financial future is right now. If you found this video helpful, don't forget to subscribe to our channel for more tips, strategies, and insights to guide you through the evolving world of investing. Hit that like button if you learned something new. It helps us grow and keeps the content coming. And don't keep this knowledge to yourself. Share this video with your friends, family, or anyone looking to level up their financial game. Starting a conversation about money can be one of the most powerful ways to unlock new ideas, spark curiosity, and inspire action. Remember, financial freedom doesn't happen overnight, but it does start with smart choices and a willingness to think beyond the ordinary. We're thrilled to be part of your journey and can't wait to bring you even more insights in our next video. Thanks for watching, and until next time, keep exploring, keep learning, and keep building your future.